Hey guys, Monday, the 6th of November 2023, and we are getting close to what is probably going to be the Santa Claus rally. Probably saw a little bit of it in equities last week. Of course, a weak miss on NFP, 150. I think we were looking for like 360. That data was a bit skewed by the strikes that were in place in the US, in North America. And so I think, a bad figure may have been priced in there. And up we went on equities to close out the week. So we're going to get into looking at the calendar of what's coming down the pike at us this week. Kind of intermittent bursts of good data and events coming through. But really, net looks like Wednesday, Thursday, the best days to trade this week when Jerome Powell will be testifying at the Senate hearing that usually follows an NFP. All right, so let's get across here and look at this. All right, so you're really seeing if we come in here, let's see. Monday, we got that German services PMI came out there, a slight beat. So, price is a little bit high. Factory orders rising a little bit, but, very recessionary in Eurozone at the moment. Thus, we are up on the euro, and kind of looking at that, we do have a stronger euro, a much weaker dollar at the moment. Do have a read of this. While they're talking about a recession in Europe, I don't know. I'm in Ireland, man. We don't feel it. I don't think so. Things are pretty good here in Ireland. I don't think they're too bad in Europe either, but who knows? The data is the data. On the back of this kind of, recessionary fear, bringing that bid into the euro and putting pressure down on the dollar, you're also going to get oil, commentary on oil here. Saying essentially like this sort of less hawkish Fed are going to jumpstart the oil rally. And sure, that's kind of a trade where a strong dollar, weak oil, weak dollar, strong oil. That correlation just ain't so. It's one of those correlations that kind of works until it doesn't work, or it just kind of works when it works. Because it is there, but it comes in, it kind of comes in and out like, a full moon sort of thing. It's kind of unpredictable to most of people when it does happen. All right. So, I just wanted to cover that Eurozone element there. Go through the rest of the week. Tuesday, API stocks, FOM, but really Tuesday, 5 p.m. GMT is when you get FOMC's Williams speaking. And you're going to, then run into Wednesday when we get German CPIs good for European traders to trade that volatility. But Jerome Powell speaking 2:15 London time, and then crude oil inventories DOE hitting in there at 3:30 as per usual. Williams speaking again there at 20 to 6 or 20 to 7 in the evening. Thursday, initial jobless claim. So Wednesday, Thursday, the big ones to look at. And then it was the report for the ags traders, you're getting all those crop reports and all that sort of stuff coming through there. And again, Jerome speaking Thursday night. And then Friday, the only thing really to worry about there is the Michigan consumer expectations and inflation expectations. But really, I think the market's going to be driving on the back of what happens on Wednesday at Jerome Powell's Senate committee hearing. Okay, so going through these elements here. Yeah, Saudi Arabia this morning confirming with Russia that they are going to continue the additional voluntary cuts to output through to the end of the year. Now we're up currently 1.5% on oil, gone from about an open at $81 even to trading 81.74s. It's a bit of a Shania Twain morning. It doesn't impress me much. I think if you trade oil and you hadn't priced in this headline here, I don't think you really trade oil. All right, this is fully priced in. They're going to be doing this, right? At the same time that they're extending these voluntary additional cuts, we have OPEC oil output rising for the third month. Now, this is released last weekend. But really, OPEC output rises 180,000 barrels a day from September. Iranian production hits a new 2018 high of 3.17 million barrels a day. This is now actually at 3.8 million barrels a day from Iran. And this little nugget here is why oil can't catch a bid. All right. Now, a lot of people have been wondering why oil isn't going crazy over war risk. It's because there is no risk to supply from, what's happening in Gaza and Israel at the moment. The risk to supply comes in when Iran really get involved, and what is going to happen before that? It's going to be Hezbollah really getting involved, which means that Israel will be opening up a battlefront on their northern border with Lebanon, and Hezbollah defending that border. Irish UN peacekeeping troops were holding that position in the Golan Heights. I think they're now out of there. And I think it's Hezbollah kind of defending that area at the moment. So this is why we're weak on oil, right? This is why we're weak. And any continued, here's a Bloomberg article kind of going back about a month, or well, 22nd of August here. And this really covered the rise, forecast the rise of Iranian production and output and sales. But you can see here, Iranian oil exports are booming. August now back up at these much elevated levels here of exports. They're exporting about 2 mil with an addition of 200,000 on top of that there. So I'll post a link to all these articles as per usual. And Barclays now seeing the Fed raising the rate in January instead of December. I could get on board with that. I mean, the Fed funds tracker, or the Fed tracker tool here on the CME is currently, if I just pop this over here, currently pricing in a pause at the next meeting at a 90.2% probability and a rate hike then at that next meeting for just under 10% probability at this time. So obviously this changes day to day depending on what new news and Fed speak comes into the market, and whether we're selling down on equities or up, or whether economic data really will shift this. Obviously PC, the big one, right? So just kind of with that story, Barclays, it's just kind of, you need to kind of read this and stories like this, a less hawkish Fed jumpstarting the oil price rally. I kind of normally wouldn't be too interested in that. But if the Fed remain, on the pause and less hawkish, i.e. not probable to do any hike until maybe January or way down the line, then that is going to be pretty decent for oil to rally, because you're going to then have super weakness come into the dollar. Then that's when that oil to dollar correlation can really kick in. When you have like rinky-dink 2%, 0.2% moves in the dollar, maybe 0.5% moves in the dollar, they're not really going to shift to the correlation with oil. But when you have like a 2 or a 5% move on the dollar, all right, well then you can price that into stronger oil, right? Then just to finish off, our friend in the East, Vlad, he's going for election again. Now, did anybody really think that he wasn't going to? I don't know. I don't know. Anyway, yeah. So I'm not sure Western powers will be happy to hear about that, but there was never a doubt, I don't think. Okay, let's get over on the charts. Let's get over here, and we're looking at oil. Yeah, we're just not able to hold above 82s here, right? This morning, bid up in the 82s in the back of this OPEC news that they're holding the cuts through to the end of the year. It's priced in. All right? And we're just not able to get over and hold 82s. And to be honest, even if we retest 83s, I think we're going to then just put in new low on the last week. So 200 EMA on WTI down at 79.44s. All right, and that's what we're looking at there. For me, I'm actually looking at it trading way lower, down to 77s at some point over the next 10 sessions. But it won't, notwithstanding a headline risk, and obviously that thesis will be completely busted and ditched should Hezbollah enter into a battlefront in the south of Lebanon with Israel. Because that would be indicative of Iran getting involved. And then there is a real material risk to them potentially closing the Straits of Hormuz or doing something that would impact the fundamental price of global oil. Right. Looking over at the SPOOs, I'm not going to go through all the equities here, but you're seeing really the S&P 500. Yeah, look, the 41.21's half came in as a banger of a level there. That was the high of the 17th of March 2021. But the reason why we were looking at that level, I'll just kind of bring it in here, was that as we moved up through 2021, this kind of became a bit of a shelf, sort of a Darvis step, top of a Darvis step. If anyone knows their Nicholas dancing Darvis strategies, but this is basically like a demand, supply and demand for contracts cycle coming in just below there, right, and driving up into 43.20s. So that's why it became relevant then when we go forward in time to where we are now to see where that 41.21 we traded into it as support and then just drove up to there or from there to 43.77s even to pretty much where we trade around right now. For me, I think we're really stretched on, and I think we're seeing a really good pullback here. Are these the bulls who want to go for a new all-time high in this environment? I don't think so. I don't think so. But I was wrong. I thought we would ditch and turn back down from 42.56 last week. We didn't, obviously. A lot of good recovery on the big seven tech names. But I think there's a real problem here for the market now between 43.77s and 43.98s. We're just going to draw that in red there roughly on this daily, and that'll get superimposed onto my 30-minute chart. And we can really zoom in to what we're looking at here. And so this is where we are. And so on this, we've come into a trend here on this 30-minute overlaid from the dailies. This is kind of where the intersection is. There is every reason in the world for us to sell down technically from here, but I think fundamentally the animal spirits were kind of woken up there. I mean, look at last week. Look at the bid that came in off of that level. It's like 1, 2, 3, 4, 5 days. Up, 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 up. All right. And I think we're in trouble in this area. Am I trading it short here? No, I would love it to trade 44.25s and then just fail. So that's the level I'm going to be looking at this week, 44.25s. And if we can't stay above, basically, if we come to Wednesday and we are closed below 43.77s, sell it. That's my idea. That's what I'm going to do. All right. I think if we just can't hold this area and we have Jerome Powell, who's come out with all of his thoughts on where they are right now, and the market just can't rally from there. I think we need to get short and liquidate some of this stuff. And what this last week of rallying, it'll just turn out to be a massive pullback and a downward movement. So that's kind of where I see S&P is at. The Dow, absolutely beautiful levels coming in for us here that we were trading on the YP about 32,400s. Don't doubt it. Bang. Where's it going? It's going to 34,335s, and then we're going to have to lighten up on those longs, boys and girls. But that is a banger of a trade. I actually missed out on this one. Oh, hold on. Didn't mean to do that. I actually missed out on this one. I'm not sure how many of the guys got on this, but it was a good one. And so, yeah, coming up to target here, 34,332s. Watch out. There might be sellers who want to jump in on this here. So really careful, guys, here. Really careful here. I don't think the selling could be too bad from here. I think, it might go down to 33,641s, but it's kind of in the middle of nowhere now. Not long to go. See here in the 30 minutes chart here. Not long to go now for it to get to that 34,332s. And if it does, actually, we could go on up onto trend here and then look to short up there. But, what about the longs? I hear you say. And longs. Yeah, look, there it is, 33,641. So a pull back to there. I would like the long. I was looking for that last week. Didn't get it. I think we could get it maybe this week. If we do, I think it's a good re-add into the swing longs. But yeah, that's the Dow. I'll just bring that one up. Where else are we looking at? Yeah, the bonds. Let me look at the bonds here because this came in as soon as Bill Ackman got out. Is this? Oh, sorry, that's the bond. I need T notes here. As soon as Bill Ackman got out, everyone got in. It was kind of like the coast is clear. The short seller is out. Why do I keep doing that? The short seller is out of the market. Right, let's get long these things here. All right, look at what happened here. Look at this. Oh, there. Oh, that's not the wrong one. That's the right one. Yeah, here we go. T notes. Weekly bars. Look at that. So the high put in there on the 5th of July, 2016 to the high of the fifth of the week of the 5th of September. And then look at that retouch here. Bang. Buyers on the book. It's reaching. Would I go buying it here now? No. I'd like a pullback to maybe 106.21s or as close to the trend as possible to then maybe get long this thing. But, you know, that trade for a day trader, that's not a trade. This is a trade for, personally, you know, I'm not licensed to tell you what to do with your pensions yet, but personally, I'd be sticking this one in the pension, man, at these prices. You know, lock in that coupon. Lock in that coupon for 10 years, man. Stick it in the pension portfolio and you're laughing. Everyone else on that trade is, you know, buying the dip on TLT is not being laughing. They will, you know, yeah. Anyway, I won't go on about it. Gold. I'll finish off on gold. I really like gold. I really liked gold last week and just couldn't get it. Just couldn't get it. I'll show you what I was doing last week here on gold. I was buyer here, and I just thought the bonds are. Hold on a sec. The bonds are going up with the real yield going down. The dollar is going down. I was like, man, we're going to 2030s on gold, and you know, it had a run. It reached a balance area high, pulled back, BPB held, and then it just fizzled. So, but meanwhile, the dollar has gotten a lot softer. But I still like gold. You know, before I talked about it maybe needing to retest 1971s where I got this area and then go bid. Maybe that's it. But I'm a tight risk trader, man. So I'm not willing to give this more than like, if I get it right, more than 20 ticks of risk. Right? Maybe on a spread strategy, I might do something. But yeah. Anyway, that's it. I like gold. I like gold. All right. Listen, please do click to like and subscribe. Thanks a million for watching. And, you know, listen, remember to be lucky out there this week. All right. Take it easy. Cheers.